Perfect. So, personally, guys, before starting the discussion, would like to tell you that whether you are from a commerce background, whether you are from a non-commerce background, it doesn't matter to me. Okay, why? Because uh, in these classes, I'll definitely try to help you leveling up your skills in terms of commerce and accounting and auditing, and I'll definitely try to match you guys to the level of commerce students, I can say, right? So feel free to reach out to me anytime in case of any queries related to accounting or auditing. Okay, and don't just study accounting, try to enjoy accounting and finance. Okay, so we won't be studying any concept of accounting in a boring way. We'll be studying these subjects in a very interesting way for your UPSC examination. Okay, so great. Let's start the discussion related to accounting. So, would like to ask from you guys, how many of you know him? He's a great legendary investor. How many of you guys know him? If you know him, type yes in the comment section. Type the name of this person, this great legendary investor. Any idea? So those who are updated with the stock market related news or finance related news, definitely they'll be knowing. Okay, Vishnu and Anki, Mr. Warren Buffett, right? He's none other than Mr. Warren Buffett, a great legendary investor. Can you guys tell me the name of this of his company? So he recently stepped down from a company. He earlier was a CEO of that company. Can you tell me the name of his company? Anyone? Any idea? No one. The name of his company is Berkshire Hathaway. I don't know whether you guys have heard about this name or not. The price of one share of Class A Berkshire Hathaway is 7,17,250 dollars. This is in dollars. This is in USD. Berkshire Hathaway Class A, 7,17,250 dollars. If I convert it in INR, Indian rupees, by taking a price of 87 rupee for $1, the price comes to 6 crore 27 lakh 18,500. So let's take it 6 crore 27 lakh as of now. Can you imagine, guys? 6 crore 27 lakh, that's the price of one share, making it the world's most expensive share. Acha, can you guys tell me the world's, not the world's most expensive share, the world's most expensive share is definitely Berkshire Hathaway Class A. Can you tell me India's most expensive share? India's most expensive share. MRF, right? Madras Rubber Factory is the India's most expensive share. MRF, right? So why you are telling us about Mr. Warren Buffett? Why you are telling about the Class A share of Berkshire Hathaway? We don't care whether the rate is 6 crore, 7 crore. We just want to clear the examination. Teach us accounting. Yes, and that's what I'm going to do. Why I'm telling you about Warren Buffett, guys, is because Mr. Warren Buffett said once, accounting is the language of the business. Accounting is the language of the business. Now, after clearing EPFO examination, you will be posted as enforcement officer, accounts officer, or maybe APFC, right? In all the three posts, I can say that you have to daily have the skills required to do accounting. You need to have broad understanding how auditing works. Why? Because as enforcement officers, you will be checking the books of accounts of the factories, whether the PF compliance has been done or not, provident fund compliance has been done or not, right? So that's why you need to have a good understanding of business, and accounting is the language of the business. Just imagine living in a foreign country, visiting a foreign country, and you don't know the local language. Let's suppose if I went to China, now I don't know the Chinese language. What will happen to me? I won't be able to communicate. I won't be able to understand things, right? That's what happens when we don't know accounting, because that's the language of the business. As we can see here in the news channel as well, whenever we see finance news, whenever we see accounting news, or whenever we see business related news, they use complex terminologies: net profit, revenue, EBITDA margin, EBIT, terminologies like this. And it makes difficult for us to understand these news, right? Because we don't have a finance background, we don't have accounting background. So that's what we are going to do in the basic classes. I'll be building your background of accounting. And personally, I don't think accounting is a boring subject. It is one of the most interesting subject, right? In my chartered accountancy course, on all the three levels, I have done a deep understanding of accounting, finance, auditing. And after that, for about 5 years, I was working in global organizations. I was working in PwC as an auditor. I was working in Royal Bank of Scotland in Treasury. And because I was having deep interest in teaching from the very beginning, so I shifted to the teaching career, right? And personally, I feel that accounting is the most interesting subject. Plus, this is a subject that will help you throughout the life taking finance related decisions. Once you are on the job, it will help you in job. It will help you deliver day to day tasks. Even in your personal finances, it will make you think smartly. It will make you outperform other people who don't know accounting. I call it financial IQ. If you have a strong fin IQ, you will be taking multiple good decisions in life, leading to a better life and healthy and wealthy portfolio as well, right? So one request from all of you, in case if you are having a doubt, you can always let me know in the comment section related to accounting, related to auditing. Plus, don't just learn it for the sake of clearing an examination. If you learn it in an engaging way, in an interesting way, take interest in accounting, definitely you will be able to ace this examination. You will do well in accounting and auditing for sure if you take interest, right? And I'll try my level best to create that interest. Even if you don't have it, no problem at all. We'll try to create it. Okay. So let's get the discussion started. The very first thing is four pillars of accounting: asset, liability, revenue, and expense. We'll just start from the basic. I don't care whether you do have a finance background or not. We'll be starting the lecture from the very basic so that you don't face any issue. Because I can understand those who are from arts background, those who are from a science background, or any other background. They have a fear of accounting, right? We won't be having any fear of accounting after 4 5 days. Okay, we'll just ace this. And this is the most interesting subject, guys, right? These are the four pillars of accounting: asset, liability, revenue, and expense. Can you guys tell me what do you understand by asset? अच्छा आप कुछ भी बता सकते हो. It's not compulsory that you need to give answer professionally only. You can share your thoughts, right? My classes are more about discussion rather than just explanation. What do you guys understand by the term asset? Anyone? Any idea, guys? अच्छा जिनको थोड़ा बहुत आता है वो भी आंसर कर सकते हो. आई डोंट माइंड. दिस इज नॉट एग्जामिनेशन. Land bought, okay, perfect. Wealth, property owned, okay. Any other opinion, guys? Would love to see your participation. The more you participate, the better learning experience I'll be giving you, that's for sure. जितना मुझसे बात करोगे उतना मैं तुमसे बात करूंगा. देखो सीधी सी बात है. Okay, any form of property, okay. It's a wealth asset that generates income. That's an amazing answer, Paramjit. Asset is that generates income. Asset is a kind of thing that generates income. That's a good answer. Something that gives us value. Good, Riddhi. Helps us make money. Very good. Anything that is bought for the benefit in production. Example, machinery. Very good. Tangible or non-tangible asset. Okay. High value. Kindly teach in English. I think that's what I'm doing. I just use 2 3 lines in between in Hindi, but I'll try to make it fully in English. Okay, no problem at all. No problem at all. So I think 99% I have only used English as of now. Just 2 3 lines in between were Hindi. Any other personal assets like furniture? Okay. Also asset depreciates. Yes. Okay, guys. What about liabilities? What about liabilities? You are having definitely understanding of asset. What do you mean by liability? Over to you guys in the comment section. What do you mean by liabilities? Okay, debt, loan, very good. Borrowings, perfect. So you guys have a basic understanding of asset and liability which is required, right? Let me just share you another perspective. Okay, not a professional one, but yes, you will like this perspective. An asset is something that puts money in your pocket. Anything that is putting money in my pocket is a asset. A liability is something that takes money out of your pocket. Anything that takes money out of your pocket is a liability, right? If I talk about asset, land, the value appreciates. Plant and machinery, producing something and generating income, right? Asset. Liability means it's taking something out of my pocket, right? It is taking something out of my pocket, sorry. Loans, I need to pay interest, I need to repay the principal, right? That's a liability. So this is a very famous quote from a very famous finance book, Rich Dad Poor Dad, by Robert Kiyosaki, right? So after your examination, you can read this book, a very amazing book for basic finance, for personal finance. If you do have interest in finance, who knows? You can gain interest, right? Always. Don't study this, Abhi. Study after this, after your examination at least, okay? So if I try to tell you professionally what do you mean by asset and liability, can I say that assets are nothing but valuable resources that gives me future economic benefit. Valuable resources that gives me future economic benefit. That's what asset is all about. It's a valuable resource and it is giving me a benefit in the future. Asset. Liability. These are my obligations. These are my obligations. What do you mean by obligations? I need to pay them. Right? I need to pay them. Asset is having a very positive vibe. My money is growing. Something is going in my pocket. It is having a very positive vibe. Right? I do have a land and building. I have assets. I have plant and machinery. I have a car. I have a bike. I have gold. I have silver. I have mutual funds. I have cash in hand. I have cash at bank. Positive vibe. Liability is having a negative vibe. Oh, I need to pay a loan of 1 crore. I need to settle a loan of 10 lakhs to my friend. I have a bank overdraft. Right? Everybody wants assets, not liabilities. But if you are doing business, there is always a balance between asset and liability. And that balance is called as balance sheet. Right? So assets and liabilities are balance sheet terminologies. Sir, what do you mean by a balance sheet? A sheet which is having balances of assets and liability. That's what balance sheet is all about. If I make a sheet, how many assets I am having, how many liabilities I have to settle. That's what balance sheet is all about. Sir, what do you mean by revenue? What do you mean by expense? I am teaching as of now, right? I'm giving you teaching services and I'm making a living out of teaching, right? So whatever courses I'm selling, that's my revenue. Let's suppose I'm a t-shirt manufacturer. I manufacture these t-shirts. So whatever amount of money I'm able to generate by selling these goods, by selling t-shirts, is what revenue is all about, right? Is what revenue is all about. Revenue, we can call it as my income, we can call it as turnover, or we can even state it as revenue, one of the same thing. Now it's not like that I keep on earning always revenue without incurring any cost, right? I need to incur certain expenses as well, just like I'm teaching you as of now. So I need a software to teach you guys. I need to hire faculties. I need a laptop. I need a touchpad. I need an iPad, right? I need to do the marketing activities. I need to make a website, build the application. So can I say that in order to earn this revenue, I need to incur multiple expenses? And let's suppose I'm earning revenue minus my expenses, what I'll be getting here, it can be either profit or it might be loss, right? It will be either profit or it will be a loss. So revenue minus expenses, either profit or loss. Can I summarize that asset and liability are part of my balance sheet? Revenue and expenses are part of my profit and loss account, P&L account. They will either result in profit or a loss. Any queries, guys? Till here, any queries, anyone related to accounting and auditing as of now? Anyone? Or everything is clear as of now? All clear? All clear, all clear, all clear? Perfect. Yes, Navi, asset is equal to liability plus capital. We'll be definitely discussing that as well. Stock market is a asset or liability? So Sultan, stock market is a market. It is neither a asset or a liability. It's just a market. If you are talking about stocks or shares, if I am holding a share of Reliance Industry, let's suppose, I am holding a share of Reliance, one share of Reliance. Now that's an asset for me. That's an asset for me, right? If you are holding a share of Adani Enterprises, of MRF, of Berkshire Hathaway, that's an asset for you, right? So guys, assets. Here we can see some of the examples like land, building, machinery, JCBs, plants, right? These all are my assets, and I can say they are my non-current assets. They are my non-current assets. Sir, what do you mean by non-current asset? Asset to is asset. What is non-current in it? If a asset is giving me a future economic benefit for more than 1 year, just like land, the value keeps on going up and up with time. Building, JCBs, machineries, it will help me generate future economic benefit for more than 1 year. Plant, it will help me generate future economic benefit for more than 1 year. In this building, I can have office, my own office, for let's suppose 10 years, 20 years, 50 years, 100 years. These assets are enabling me to generate future economic benefit for more than 1 year. They are non-current asset. What they are? Non-current asset. For more than 1 year, they are giving me the benefit, right? Some assets are current assets. They are also giving me benefit, but for 1 year only. Cash in hand, bank balance, stock in trade. Let's suppose I am the owner of this departmental store. So I'm having this stock, inventories. So I'll be selling it. And that's my estimation that I'll be selling at least this stock in 1 year, right? Obviously. Who thinks like that? I won't be able to sell inventory for more than 1 year. No one. Every businessman is optimistic, right? You will be able to sell this particular stock in 1 year. Gold. It depends whether you want to hold gold for more than 1 year or less than 1 year. If you are having a short term investment in gold, let's suppose you just want to hold the gold for 3 months, 4 months, 6 months, 5 months, or maybe less than 1 year, it will be a current asset. If you are holding gold for more than 1 year, it will be a non current asset. So my answer will be it depends. It depends on what? Your holding period, your intention, right? So it depends on your intention whether it's a current asset or whether it's a non-current asset, right? It totally depends on the intention. Liabilities. Just like we are having two classifications in the asset, non-current asset and current asset, we also do have two classification on the liability side, non-current liability, current liability, right? Sir, what do you mean by non-current liability? Long-term loan from bank. Let's suppose I have taken a long-term loan of 5 years from bank. That's a non-current liability because I need to settle that obligation for more than 1 year. I need to settle that obligation for more than 1 year. Let's suppose I do have an electricity bill. I haven't paid the electricity bill yet. That's a current liability. I need to pay it the very next month. Otherwise, they will cut the electricity. Bonds. Let's suppose Government of India has borrowed money by issuing bonds. It's a liability for Government of India. Now that depends whether bonds are of long term or not. Usually bonds are of long term only. Debentures, long term liabilities, right? Now here is a format of balance sheet. This is called as balance sheet. This is a format of balance sheet. What is balance sheet? It is nothing but a statement of asset and liability. We can see that we are having assets. We do have some liabilities as well, right? And the balance sheet, as the name says it all, it always balances, right? As the name says it all, it always balances. It will be having always the equal weight, where the total of both the columns will always match. If it is not matching, there is some problem with accounting. There is an error in accounting, right? That's what the purpose of balance sheet is all about, guys. So let's have a deep down, like what are the things which are there in the balance sheet. I can see that I'm having assets like plant and machinery, land, buildings, stock, debtors, cash. In the liability side, I am having capital, I'm having reserves, debentures, loans, long term, creditors, bank overdraft, and so on. Right? These are my assets and liabilities. Let's have a quick exercise, guys. Okay, let's have a quick exercise. So I don't want it to make it just a kind of conversation or lecture. Let's make it something more than a lecture. So here are the assets in front of you. One by one, you need to tell me whether this is a non-current asset or a current asset. So let's start with the first one. Number one, plant and machinery. Can anyone tell me whether this is a non-current asset or it's a current asset? Anyone? Can we call investments as non-current assets? So Sultan, that depends again on the intention. Let's suppose you have invested in a share. Let's suppose you have invested in stock market for 2 months. That will be a current asset. If you have invested in stock market for 1 year, 2 year, 3 year, 4 year, that will be a non-current asset, right? Very good, everyone. Plant and machinery is a non-current asset. That's a non-current asset, right? Very good. What about land? Anyone? In the comment section, quickly. What about land? Non-current asset, very good. Building, what about building? Any idea? Non-current asset. Stock in trade. What do you mean by stock? anything in which I am dealing. Let's suppose I am a t-shirt manufacturer, so t-shirt will be a stock for me. Let's suppose I am a pen manufacturer or I am just trading pen, it will be a stock for me. Current asset, very good. Current asset, because I expect that my stock will be sold within 1 year. What about debtors? Do you guys know what debtors is all about? Any idea about debtors? What about debtors? Can anyone tell me what do you mean by debtors? Yes, it is a current asset, but what is the meaning of debtor? Anyone? Perfect. Let's take an example. I am a t-shirt manufacturer. I am a t-shirt manufacturer. This is my balance sheet. This is my balance sheet. So I can write that balance sheet of Pratik Limited. Okay, I'm a corporate entity. This is my balance sheet. Let's suppose I have sold t-shirts on credit to Mr. A. To Mr. A, I have sold t-shirts on credit basis. You won't be paying me money as of now. The amount is 2,50,000. And he will be paying me money. Let's suppose after 3 months. So definitely he is my current asset. Why current asset? Because he is giving me future economic benefit. He will be paying me 2,50,000, right? I'll be receiving something of value. Money is coming in my pocket. That's an asset. That's a current asset because it is coming in less than 1 year. That's a current asset. That's for sure. But I will denote Mr. A as my debtor. This is my debtor. 2,50,000 debtor. That means he will be paying me money in the near future, right? He owe me. He'll be paying me money in the near future. That's what debtor is all about. That's what debtor is all about, right? Now let's suppose I bought these t-shirts from Arun. Arun is a wholesaler. I bought these t-shirts from Arun. I will be paying money to Arun after 4 months. Let's suppose. That's what happens in the business, right? We take stock on credit, we sell it on credit, we realize from our debtors and we pay to our creditors. Arun is my creditor. Arun is my creditor. Because I have bought goods from Arun on credit. I have bought goods from Arun on credit. Arun is my creditor, right? I owe him the money. I'll be paying him in the near future. So that's why I'm showing him in the liability side. Sir, how debtors come in asset? How debtor come in asset? Look, how debtor is coming in asset because I have sold goods to Mr. A. I'll be receiving the benefit in the future. I'll be receiving the benefit in the future. He'll be paying me 2,50,000 after 3 months. He'll be paying me 2,50,000 after 3 months. So can I say that he is giving me future economic benefit? Yes, definitely he is giving me future economic benefit. Yes, you can say that Pratik is a middleman, but middleman is a term used for brokers. Here I'm not a broker, here I'm a trader. That's what traders do. They purchase goods and services from someone, from creditors, and they sell it to debtors. That's what the business of trader is, right? I'm not manufacturing anything. I'm just doing trading. Buying from someone else and selling it to others. Right? So here Arun will be my creditor because I need to pay him the money after 3 months, after 4 months. Mr. A will be my debtor because I need to receive money. Cash in hand and cash at bank, obviously they are my current asset, right? They are my current asset. If I talk about liabilities, again liabilities may we are having two classification, non-current liability and current liability. Equity share capital, that's my capital. Sir, what is my capital? Amount invested by the owners of the company is what capital is all about. Preference share capital is again my capital. We'll be having a separate discussion on what equity share capital is, what preference share capital is. As of now, we are just creating a base for you guys, right? I'm just creating a base for you guys. Later on, we'll be definitely discussing about each and every terminology, like what is equity share, what is preference share, and so on. General reserve. It is a part of equity share capital only. Debentures, non-current liability. What is debentures? Understand debentures as a loan only. I have issued you guys debentures worth rupees 1 crore rupee and you paid me 1 crore rupee. I have issued you debentures for that. It's nothing but a security. Debentures is a paper security, right? So can I say that it is a non-current liability for me? It's an obligation for me. I have to pay fixed amount of interest. You can see here, I need to pay 15% interest, clearly written as a prefix, right? So that's a liability for me. I need to repay them the money with interest. With interest. Bank loan, obviously it's a non-current liability. Trade creditors. I'm talking about Arun here. What do you think, guys? Trade creditor is a current liability or a non-current liability? Anyone in the comment section quickly? Quickly. Yes, that's a current liability. That's a current liability. I'll be definitely delivering my obligation within 1 year itself. Within 1 year itself. Right? Bank overdraft. Current liability. Overdraft are usually for a short-term purpose, right? Overdrafts are usually for a short-term purpose. Okay, so before continuing to the next part, before starting the next part, I'm just dropping a link in the comment section. This is my Telegram channel link. You can join this channel if you want. I keep on posting accounting and finance related stuff on this channel. Okay, so just for learning purpose, if you are targeting any government job, right, like EPFO, UPSC, EPFO, SEBI, RBI, and so on, you can join this channel. I frequently share finance related things, accounting related things, and a lot of financial IQ related learnings on this particular channel. Okay. Now, guys, try to understand. Asset is always equal to liability plus capital. I can say that this is the total of my asset is equal to liability. These are my liabilities. This portion is my capital. So asset is always equal to liability plus capital. And that's what we can see here. 6,75,000 is equal to 6,75,000. It will always hold true. It will always hold true, right? Sir, why it will always hold true? Because that's the rule of accounting. This is the accounting equation. Asset will always be equal to liability plus capital, right? Asset is always equal to liability plus capital, and that's what we also call it as dual aspect of accounting. Dual aspect of accounting, right? Or we can say debit is equal to credit. Liability and capital do have a natural balance credit. Asset is having a natural balance of debit. So that's why we also called it as debit is equal to credit or asset is equal to liability plus capital, right? Okay, so here we are having a good question. So what is capital? What is the difference between asset and capital? There are two terms here, asset and capital. What do you guys understand by the word capital? Anyone? Anyone in the comment section? What do you mean by capital? Any idea? Investment, okay. Owner's investment, very good, Mira. Money investment generally at the start of business, perfect. Capital is money or investment for growth or functioning, okay. Initial or followed up, okay, perfect. Great. This is the balance sheet of business. This is the balance sheet of Pratik Limited. It's a corporate entity. Pratik is the owner. I am the owner. So in order to start this business, I have invested some capital. Let's suppose 2 lakh rupees. So I invested this 2 lakh rupees just to start a business. That's what capital is all about. Amount invested by the owner of the company. Who are the owner of the company? Equity shareholders are usually the owners of the company, right? So amount invested by the equity shareholders is called as capital as of now. Just try to understand this example. Yes, definitely. Equity shareholders can also be increased just like IPOs, IPO, FPOs, right? It can be follow-on public issue as well. It can be initial public offer as well, right? In simple terms, whatever amount the owner has invested in business is called as capital. Sir, if it is an investment by the owner of the company, why you are showing it in the liability side? Don't you feel that it should be in the asset side and not the liability side? Can anyone tell me the reason why capital appears on the liability side? Anyone? Any idea? Entity concept. Okay, which entity concept? Mira, which entity concept? Can you tell me the full name of that concept? Okay, because it's owner's money. Perfect, Navi. Not generating any income. No, capital is generating an income. I can do anything with capital. Without capital, business cannot function. Very good, Ruchi. Business entity. Very good. Another opinion, Reshmi, I can see that because it has to be paid back to the owner. Very good. Liability for company to pay back investor. Good, Anki. Where the owner is supposed to pay back to the investment to the owner. Take care. Perfect. So guys, look, it is due to business entity concept. Sir, what is business entity concept? Owner is different from business. Owner is different from business. Let's suppose the owner has invested 2 lakh rupees in a business. That's capital. Now, if I have invested my personal 2 lakh rupees in a business, what I expect that this business should earn something for me. So the expectation is that the business should earn something for me. So can I say that it's an obligation for the business to earn for me? Right? On my behalf, the business has to generate some value. That's why capital as well as profits that the business has generated, they are part of the liability side. Why? Because they are assets for me. For the owner, they are assets. But because of business entity concept, business is different, owner is different. If the owner has contributed something in the business, that's a liability for the business. Business has an obligation to repay the capital with profits, right? Yes, business is supposed to pay back the capital to the owner along with profit. Or I can say that business has to use that capital for a longer period of time, forever, I can say, and generate continuously the profits for the owner. That's why capital appears in the liability side. Yes, they are two separate entities. Business is different from the owner, right? Business is a separate entity, owner is a separate entity. That's why we call it as business entity concept. Don't try to mix personal transactions with the professional transactions. It might be an asset for me, 2 lakh rupees are definitely asset for me, but for my business it will be a liability. So can I say that profits and capital, they are a liability for the business? That's why we show it in liability section, right? So guys, I'm giving you quickly some of the terminologies. You need to quickly tell me whether it's a asset or a liability. Just type A or L. The first word is debtor. It's a very simple exercise. Sure, Akhilesh, I'll definitely explain that as well. Just try to attempt this exercise first, and after that, we'll be definitely having a discussion why general reserve is considered as a liability. Okay. Yes, asset. Very good. What about land? Obviously, asset. What about building? Obviously, asset. Now, you guys tell me bank overdraft. Quickly in the comment section. Bank overdraft. Asset or liability? Liability. Very good. That's a liability. What about bank loan? Obviously, bank overdraft hai to bank loan is also a liability. What about capital? Just now we have learned that this is a liability. Trade creditors. Trade creditors. What do you think, guys? Asset or liability? Liability. Perfect. Cash at bank. I am having 2 lakh rupees in HDFC bank account. Asset or liability? Obviously, an asset. Right? Okay, so Akhilesh asked one question, so why general reserve is a liability? Can you please explain that? Definitely, we can explain that. What is general reserve basically? 20,000. Let's suppose you earned a profit of 1 lakh. That's your profit. That's your purely a profit. After incurring all the expenses, that's your profit. Now let's suppose you have distributed this profit to the owners, obviously. 80,000 rupees you have distributed to the owners. Rest of the 20,000, you don't know what is the purpose of this 20,000. So let's keep it as in general reserve. I don't know how I'll be using this money as of now, but definitely it's money. So obviously it will be used somewhere in the near future. So let's keep it in general reserve. That's what we also do. If we receive a pocket money of 1,000 rupee, we separated 200 rupees for general purposes. We invested 800 rupee, or we did expense out of 800 rupee, but 200 rupee we are setting aside for a general purpose, right? We are just saving that money. So what is general reserve? Basically, it's nothing but a part of profit only. If profit is a liability, general reserve will also be a liability, right? If profit is a liability, general reserve will also be a liability. And because all the profits belong to equity share capital, general reserve is also the property of equity shareholders. So Akhilesh, that these are two things. It's a great question. Let's suppose I am having a general reserve of 20,000. So in accounting, we are always having two impacts, right? That's why we call it as dual aspect. The first impact is 20,000, which is general reserve. Now, where this general reserve is kept, obviously either in cash or bank or in a mix of both. So in cash and bank, I'll be having 20,000 rupees. That's what general reserve is all about. So I've already shown that 20,000 as part of my cash and bank, right? A portion in cash, a portion in bank, and it's there in the general reserve as well. That's why the balance sheet is matching. That's why we always call it as accounting equation: asset is equal to liability plus capital. Asset is equal to liability plus capital. Let me just give you a simple example so that you can easily understand this thing. Let's suppose the owner of the business has invested 1 lakh rupees, say for example, in as part of capital. So in capital there will be 1 lakh rupee. We'll be increasing the capital by 1 lakh. And obviously, because I have given cash or bank, maybe I have given a check to my business, maybe I have given it in cash. So the cash and bank balance will also increase. It can also be in the form of kind. Let's suppose I have introduced capital not in the form of cash, not in the form of bank, but I have given my personal plant and machinery to business. I have given land, I have given building. So in accounting, every transaction will be having two impact. So the two impacts of this particular transaction is capital is increasing, at the same time any of the asset will also increase. It can be cash, it can be bank, it can be plant and machinery. I hope it's clear now, right? That's why we call it as dual aspect. Asset is equal to liability plus capital. If the capital is increasing, at the same time asset will also increase, because I have contributed capital in the form of cash or maybe bank or maybe land. So increase in one thing will cause an increase in another thing. I hope it's clear now. That's what dual aspect is all about. Let's try to understand the difference between preference shares and equity shares. So before I start sharing my opinion, can you guys tell me in the comment section what's your understanding regarding the preference and equity shares? Anyone? What is preference share? What is equity share? Anyone? Would love to know from you guys. What's your understanding regarding preference shares and equity shares? No idea? Okay, no problem. What about others? Preference shares are like bonds, okay? Can't recall, sir. No problem at all. Voting rights, very good. One point I can see is voting rights. Equity shares are having voting rights. In preference shares, there is no voting right. What do you mean by voting right? Right to vote. In case of any decision, preference shares cannot vote. However, equity shares can vote. Now we saying they can convert into equity, okay? Akhilesh, equity shares can be open to all. Preference shares, the one who can vote in decision. No, it's just the reverse. Preference shares cannot vote in a decision. Equity shares can definitely vote in a decision. Any other opinion? Anyone? Preference in liquidation, very good. What if things go south? What if my business is not doing well? I'll close the business. In case of closure of business, they will be getting a preference. इनके तो नाम में preference है. They have a preference in the name itself, right? So I'll be first paying the money to preference shareholder, and whatever is remaining will be going to the equity shareholders. Very good, RK. Equity are the real owners of the company. That's the main point. Equity shareholders are the owners of the company, whereas preference shares are not the owners of the company. So let's one by one try to understand the differences. Okay, so this is preference share capital. This is equity share capital. Let's try to study this topic in a more engaging way. Okay, so I'm starting a new company, guys. I'm starting a new company. Okay, I'm going to start a new company. I have two shares for all of you. I have two shares for all of you. One is equity share capital, another one is preference share capital. Now let me just quickly tell you the differences. Then you can select one of the capital. You can't select both of them. Okay, as of now in this particular exercise, you have to select just one. If you become equity share capital in my company, I'll be giving you ownership. So what do you mean by ownership? If I earn 1 lakh rupee, I'll be giving you a share from 1 lakh rupee. If I earn 1 crore rupee, I'll be giving you a big share from 1 crore rupee. If I earn 100 crore, I'll be giving you a share from 100 crore. That means if my company is growing, definitely the owners will also grow. That's equity share capital. However, if things goes to south, if I start facing the losses, you guys also have to face the losses. Maybe your capital won't come ever. So you'll be having a high risk, high return in equity share. I'll be also frequently asking for your opinion. That's what voting right is all about. Whatever decision I'll take, I'll definitely ask the owners of the company. But preference share capital, again, it is also a capital only. But I'll be paying you a fixed amount of money, a fixed percentage of money. Let's suppose 10%, 15%. So let's suppose you have contributed 1 lakh rupee. I'll always be paying you 10,000 or 15,000. 1 lakh ka 15%. So can I say that you will be only receiving a fixed amount of money always? However, if I start facing liquidation issue, if my business is not working properly, you will be getting a preference because you are not the real owners of the company. So definitely I'll be giving you a preference. You please take your money first. However, if you are an equity share capital, your money can go to zero as well. If my company goes to zero, your money will also be zero. If my company goes to 100 crore, definitely you will be getting a share from 100 crore, right? So tell me in the comment section whether you want to take equity share capital in my company or preference share capital in my company. Over to you guys in the comment section. What do you think? Equity share capital or preference share capital? So many preference share capital I can see. Nobody trusts me. Nobody trusts me. So obviously this is my first class. How you will guys be trusting me, right? Everyone is buying preference share capital. Sir, you are having a good amount of risk in your company. We don't want to take risk. Let's go ahead with the preference share capital only. Nobody wants to become owner in my company. Okay. Just one equity. Okay. Rest all wants preference share capital. But if risky, I may go for equity. Okay. If the sector and company fundamentals are fine. Okay. Next time equity. This time preference. Okay. Perfect. So I can see a lot of students are not trusting me because it's my first class, right? No problem at all. After a few classes, maybe your opinion will change and you will go for an equity. As Arun mentioned, next time. Better luck next time, sir. No problem at all. Look, it depends on your risk taking capacity, always. There's a rule of finance. Higher the risk, higher will be the return. Return and risk will always go hand in hand. If the risk is low, your return will also be low. Right? Now let's try to discuss the differences of preference and equity. We have already discussed it. I'm just documenting it. Okay. Before that, would like to see the comment section quickly. Can we say that preference shares are given to creditors of the company who prioritize money over ownership? Yes. Okay, not directly creditors, but they are also called as shareholders only. However, the features are similar like creditors and debt only, right? Although normal people go for equity shares, we buy our equity shares, yes, but the business shutdowns rarely. It happens in case of listed company. In case of private sector, companies are shutting down regularly, right? So it depends. Again, look, the very first difference is equity shareholders are the owners of the company, and because they are the owners of the company, they will get a high return. Plus, they will be having a high risk as well. Obviously, there is no such thing as limit in case of ownership. You will be getting sky is your limit, right? At the same time, in terms of risk as well, sky is your limit. However, in case of preference share, I can say that they are not the real owners of the company. Their return and their risk, they both are limited. They both get dividend only because they are shareholders. And shareholders always get dividends. And what do you mean by dividend? Dividend is a part of profit. They'll be getting a part of profit. They both will be getting dividend. However, here there will be fixed dividend. Preference shareholders will be getting a fixed dividend. Whereas equity shareholders will be getting a variable dividend. What do you mean by variable dividends, sir? It depends. Your dividend depends on how much I am able to earn. The more I earn, higher will be your dividend. However, that's not the case with preference share. If I earn 1 crore, your dividend still will be 15,000. If I even earn 100 crore, still I'll be paying you only 15,000. You will be participating in the growth rate of my company. Preference shares. Right? If my business goes to zero, equity shareholders will also go to zero. Right? So can I say that they do have a residual interest? They will be the last one to whom I will be paying the money if the business goes to zero. However, as the name says it all, preference, I'll be giving them preference in repayment of their money. I'll be giving them preference in repayment of their money. Right? Preference share is like FD and equity share is like crypto. No, it's not like that. Okay, it's not like that. Don't compare equity share with crypto. Okay, it's not that risky. Whatever stocks we are buying in share market, you guys, whatever, if you do trading, if you do investing, whatever shares you are guys are buying in the stock market directly from the broker, they are equity share capital. Usually they are equity share capital, right? You won't be receiving any kind of fixed dividend, right? It's a variable dividend, and you participate in the growth of the company. Both are liabilities only. That's why we can see both the shares in the liability side. However, one interesting thing we can see, 13% preference share. That means it is a fixed dividend. It is a fixed dividend. Obviously, we cannot see any prefix in front of equity. However, there is a 13% preference share attached to the preference share capital. That means if you are having 1 lakh rupee preference shares, you will always be paying 13,000. 13% of 1 lakh, 13,000. You will be always paying 13,000 rupees as dividend. Right? I hope the difference is clear. Okay, great. We are good to go ahead with the second part of accounting. So let's start. Yesterday we discussed about the preference shares and equity shares. Now let's discuss about the term debt versus debtor These are two different terminologies. Okay. Let's have a quick understanding of debt and debtor. Why? Because many of the non-commerce students background, those students who are having non-finance background or maybe non-commerce background, they struggle with these terminologies, debt and debtor. Sir, is trade creditor means traders? Okay. Look, trade creditor means, let's suppose I have bought this pen on credit from someone, Mr. A and Pratik. So I have bought this pen from Mr. A on credit basis. I'll be paying him money after 3 months. After 3 months, I'll be paying him the money. So I can say Mr. A is my creditor. In my books, A will be my creditor. Why? Because A is a liability. A is a liability. I need to settle my liability, my obligation within 3 months. So that's what the meaning of creditor is. Those people, those entities from which I have bought goods on credit, I have taken services on credit, and I'm yet to pay them the money. That's what creditor is all about, right? Okay, guys, debt versus debtor. So why students feel confused in debt versus debtor? Because there is a word debt in debtor as well, right? So that's why they think that debtor is also a kind of debt, which is totally wrong. Debtor is a very different thing and debt is a very different thing, right? What do you mean by debtor, guys? Can anyone tell me in the comment section quickly? What is the meaning of debtor? Anyone? Would love to see your participation, guys. What is debtor? Let's suppose I have sold goods on credit to Mr. B. I have sold goods on credit to Mr. B. Mr. B will be repaying me money, but after 3 months. So in my books, Mr. B is a debtor. Debtor means an asset for me. However, in Mr. B's book, Pratik is a creditor. Liability. That's what the difference is, right? That's what the difference is. He'll be giving me money after 3 months, so definitely it is a future economic benefit for me. He is my debtor. So can I conclude that debtors are my asset? They are my asset. They are my current asset. However, debt means obligation. And obligations are always liability, right? When I talk about debt, that means long-term loans. Sorry. Debt means long-term loans. It can be bank loan, it can be debentures, it can be even bonds. All these are nothing but debt. They are my fixed obligation. Right? So in the balance sheet, if I can say debtor is an asset, so obviously I can see debtors here. Whereas debt is a liability. So debentures, long-term loans, these are my debt. Okay, so debt is totally different from debtors. Please do remember that. Okay, debt is totally different from debtors. Next one is the concept of depreciation. Can anyone tell me what do you mean by depreciation? What do you understand by depreciation? Anyone in the comment section, quickly. What do you mean by depreciation? So recently I bought a laptop. Okay, recently I bought a laptop. Okay. So this was an AI laptop. It was recently released. Let's suppose the cost of this laptop is 1,50,000. Okay. I recently bought a laptop, HP Omen series, 1,50,000 cost. Do you think that the value of this laptop in the next year, this is the first year, do you think that the next year the value will be equal to 50,000, less than 50,000, or more than 50,000? What do you think? What do you think? What will be the correct choice? Less than 50,000, option A. Equal to 50,000, option B. More than 50,000, option C. What will happen to the laptop? To the price of the laptop, to the cost of the laptop, basically. Mira Ruchi, less than 1,50,000. Why? Because now it is a second-hand laptop. Now it is a second-hand laptop, right? So what I wanted to say is the value of fixed assets always decreases. The value of the fixed asset always go down. And that's what we call it as depreciation. Depreciation, right? That's what we call it as depreciation. Why it goes down? Because now it is a second-hand laptop. Normal wear and tear, I'll be definitely using that laptop. Maybe due to technological obsolescence. Let's suppose that was an AI model. The next model was maybe more advanced. So the price of the previous model goes down definitely. So can I say that when I bought it, it was 1,50,000? Maybe next year it's just 1,20,000. Maybe after second year, maybe in the third year, it is just 90,000. In the fourth year, it will be 50,000. Say for example. So can I say that the fixed asset value always go down? Plant and machinery, the same thing will happen. Building, the same thing will happen. Vehicles, the same thing will happen, right? The value always goes down. So decrease in the value of fixed asset because of natural wear and tear, normal wear and tear, usage, technological obsolescence is called as depreciation. So in easy terms, I can say fall in the value of fixed asset. Sir, why only fixed asset? Why not current asset? Current assets are already realizable within 1 year. Why you will be charging depreciation on it? Something that turns into cash or receivables within 1 year. It doesn't matter that we charge depreciation on it, right? Because the life is only 1 year. But fixed asset, the life is more than 1 year. Non-current assets, right? They are useful in the business for more than 1 year. So what I'll be doing here is I'll be charging depreciation. So depreciation is nothing but an expense. It is a non-cash expense. Sir, why it is an expense? I have bought something worth 1 lakh. The next year it will go down to 80,000. So can I say that the value of my asset is decreasing? Yes. So why not to book it as an expense? In the books of accounts, why not to book it as an expense? That's a prudent approach, right? That's an intelligent approach. That's what depreciation is all about. Can you give me one example, one fixed asset example on which depreciation is not applicable? Anyone? There is a fixed asset on which depreciation is not applicable because it is not a depreciable asset, it is a appreciation wali asset. Anyone? Very good, Navi. Land, right? A plot of land. Depreciation is never applicable on the land because usually the value of land goes up. The value of land goes up. Look, guys, gold is an investment, right? Definitely, it's also a fixed asset, but gold is not at all a fixed asset that I'm using in my business, right? So obviously the value of gold will always go up. Why? Because it is a store of value. Same case with land only, but the land I can use in my business as well, right? So that is one of the fixed asset on which depreciation concept won't be applicable, right? So I can see here that plant and machinery, building, on these two fixed asset, I'll be charging depreciation. Why? Because the value goes down year on year basis. Financial statements. What do you guys mean by financial statements? There are five types of financial statements. Balance sheet, which we also call it as statement of financial position. What is my current position? Profit and loss account. Statement of financial performance. Cash flow statement. What is the flow of cash in my organization? Statement of changes in equity. What is equity? Owner capital. So what changes are there in the equity is what depicted by the statement of changes in equity. Notes to accounts. Now these are explanatory notes. Just in school we need to prepare the working notes. First we will be solving the question, then we'll be preparing the working notes, right? Just like that. First we'll be preparing the balance sheet, at the same time we'll be preparing the notes, the explanatory notes to the all the statements, right? So these are the five types of financial statement as per Companies Act. Companies Act 2013. These are the five types of financial statement. It is clearly stated in section 2 subsection 40 of Companies Act 2013 that we are having five types of financial statements: balance sheet, profit and loss account, cash flow statement, statement of changes in equity, and notes to accounts. So Siva, sometimes I use Hindi, sometimes I use English as required by the students, right? As per the requirement of the student. So that's why it is there. In most of the RBI classes, I have used English only. In some of the initial classes, I might have used Hindi in between. Okay. So definitely we'll be keeping completely in English only for this particular batch. I totally understand that some of the students don't understand Hindi in this batch, and that's totally fine. We'll be using complete English in the best interest, right? For everyone. Okay, guys. Now let's discuss about the concepts and conventions. Okay, concepts and conventions. And Siva, in case if you are having any queries, you can always reach out to me on Telegram. I'll be more than happy to help you guys. Okay. So even if you are not able to understand some of the concepts, or maybe you are having some of the query, you can always drop me your doubts on the Telegram channel, my Telegram channel. Okay. One doubt, that do we need to cover consignment accounting as well? So you'll be just having a look at the basics of consignment accounting. Okay, there was one question in the previous year question paper. Definitely we'll be having a short discussion related to that as well. Okay, so these classes have been completely on the track of your previous year, considering the track of your previous year question paper as well, plus some of the related exams as well. So don't worry about your course, guys. We'll be doing an exclusive coverage of each and everything. Okay, so don't have that query in mind ki whether we'll be able to cover each and every chapter or not. We'll be definitely covering each and everything from your accounting part, which is there in your previous year question paper. Okay, guys. Let's start concepts and convention. Before moving ahead, do you guys have any understanding related to concepts and convention? Anyone? What do you understand by concepts and convention? Anyone? Concepts and convention. Any idea? Anyone would like to try this? Concepts and conventions of accounting. Okay, no problem. Okay, core and changes. Let me tell you, concepts are nothing but principles of accounting that we need to follow, right? They are mandatory in nature. But when I talk about conventions, these are the best practices. These are the best practices that we need to follow, that have been, that people are following from years, right? These are some of the practices that people are following from multiple years. However, if I talk about the concepts, they are the principles. They are mandatory in nature. Conventions are also recommendatory in nature. Why? Because we are following it from a very long time. Let's have a discussion regarding concept and convention. And before starting concepts and convention, would like to tell you guys why we need concept and convention. Say for example, Siva is preparing the accounting records, books of accounts. I am also making the books of accounts. We both are involved. We both are doing the business of pen manufacturing. We both are manufacturing pens, right? We both are manufacturing pens. He is also doing accounting. I am also doing accounting. But he is doing accounting in his own way. I am doing accounting in my own way. That is the real problem. We don't have consistency, right? We don't have the same base. He's doing accounting as per his will. I'm doing accounting as per my will. Do you think our data is comparable? No. It is not at all comparable. Why? Because we are following different rules and regulations, right? That's why we need concepts and conventions. These are some types of rules. These are some types of principles and best practices of accounting that if you will be following, it will enhance the presentation of your accounting records. It will enhance the comparability of your accounting records, right? So that's why they are very, very important. And if you will have a look at the previous year question paper of UPSC examination, you will feel that most of the questions of accounting are based on concepts and conventions, right? So definitely guys, one advice from my end, if you are giving UPSC EPFO examination, you should be having very strong basics of accounting, like concepts and convention, what accounting is all about, what is accounting process. So please be attentive in the sessions. Very, very important topic, right? The very first concept, business entity concept. We already discussed yesterday about the business entity concept. It is nothing but it states that the owner of the business is different from the business in itself. The owner of the business is different from the business. So whenever the owner is contributing any kind of capital, it will be a liability for the business, right? It will be a liability for the business. Why? Because this is the asset of the owner, not for the business. Separate legal entity, or I can say business entity concept, accounting entity concept. Business is different from the owner. If owner has invested 1 crore worth of capital in business, business is under an obligation to earn profits on this capital, right? So because of this concept, capital and profits on that capital will be shown as liability for the business. Why? Because we are always preparing the balance sheet, profit and loss account from the business viewpoint and never from the owner's viewpoint, right? This is the balance sheet of the business, not of the owner. That's why capital and profits are liability for the business, right? So whenever I say P and L account, okay, I'll tell you this later on. After discussing one more concept, I'll be telling you. Okay, after once I'm done with the modern concept of accounting, then I'll be telling you this. Okay, so that's business entity concept. Next one, going concern. Any businessman who is starting a new business, any businessman who is starting a new business, definitely he wants to continue business forever, right? Nobody wants to start a business just to do it for 1 or 2 years and then shut it down. No, everybody wants to continue the business for the foreseeable future, right? So going concern means the business will continue to go. The business will continue to go for the foreseeable future, right? And we don't have any intention to close it down. We don't have intention to close it down. That's what going concern is all about. Business is all about being going concern. Because of this concept, we are differentiating the non-current assets, non-current assets, current assets, non-current liabilities, current liabilities, revenue expenditure, capital expenditure. That's why we are differentiating capital expenditure from revenue expenditure. What do you mean by capital expenditure? Let's suppose if I have bought plant and machinery, that's a capital expenditure. Revenue expenditure, I have paid salaries. That's a revenue nature expenditure. Every year I need to do the revenue nature expenditure, paying salaries, right? Paying the light bill, electricity bills, and so on. But when I talk about capital nature expenditure results in creation of fixed assets, just like land and building, plant and machinery, right? Because of going concern, there is a difference between capital and revenue expenditure, because capital expenditure is resulting in creation of fixed asset. Fixed asset is those assets that are helpful for generating the future economic benefit for more than 1 year. If I do have an intention to close in this year only, then why there is a need to create that bifurcation, right? If I want to close the business right now in this particular financial year only, why there is a need to do all the bifurcation, like this is revenue expenditure, these are my fixed asset, this is my current asset? Why there is a need? You're going to close the business in the particular financial year only. That's why, because we are going concern, we have the intention to continue for the foreseeable future. We don't have the intention to close it down. We are a going concern, right? We are a going concern. Accrual concept of counting. Transactions are recorded. Hear this line very carefully. Transactions are recorded in the period in which they takes place, not when settlement in money takes place. Let me just give you an example. Let's suppose I have sold goods. I am a pen manufacturer. I have sold 100 pens to, let's suppose, Arun. I have sold goods to Arun on credit basis. So definitely Arun will be paying me money, but after 3 months. So today is January, say for example, January 2025, and Arun will be paying me the money after 3 months. So January, February, March, right? Arun will be paying me the money somewhere in the April, say for example, April 2025. This is the transaction. I have sold goods on credit to Arun. Arun will be repaying me the money after 3 months. After 3 months, he'll be repaying me the money, right? What do you think, guys? Do I need to record the sales right now or after 3 months? What to do? Do I need to record the sales, the income right now, or in the future after 3 months when I'll actually receive the cash? What do you think? Do I need to recognize the sales right now or after receiving cash from Arun? Okay. So Divya, Shiva, Navi, Arun, Ruchi, right now, very good. That's the correct answer. Why right now? Because transactions are recorded in the period in which they take place, not when settlement in money takes place. Transactions are recorded in the period in which they takes place, irrespective of the money settlement. I don't care about the money. I care about the transaction in accounting. Why? Because I am following accrual basis of accounting. I am following accrual basis of accounting. Transactions are recorded in the period in which they takes place, not when settlement in money takes place. Because even if I don't receive the cash, Arun is now my debtor. So I'm good to recognize my sales. Right? In the near future, after 3 months, I'll be definitely receiving the cash. So that's fine. But I have sold the goods right now. The transaction is right now. Arun may say that the trade didn't take place. No, it's not like that. There's a proper invoice, there's a contract, okay, which is also subject to legal proceedings. So that's a usual scenario, right? In trade and business, it happens like that only. We sell on credit. We take goods on credit, we sell that on credit. So 30 days, 60 days, 90 days is the usual credit period that we give it in business. Can turn into non-performing asset. Yes, definitely. Anyone can turn anytime into non-performing asset. Have a look at Vijay Mallya. Have a look at Nirav Modi, right? Mehul Choksi. NPS can happen anytime. So that's accrual concept. That's the accrual basis of accounting. It is also called as mercantile basis of accounting. Please do remember it is also called as mercantile basis of accounting. Right? Why? Because of accrual concept of accounting. So there are two types of methods. There are two methods in accounting. One is the accrual, another one is the cash basis. So majority of the businesses, or I can say 90% of the businesses are always following accrual basis of accounting. We also call it as double entry bookkeeping, right? Double entry bookkeeping method. Cash basis, I'm only doing accounting when I'm paying cash or when I'm receiving cash, right? That's what cash basis and accrual basis is all about. Dual aspect of accounting, we already know what dual aspect is all about. Debit is equal to credit, or asset is equal to liability plus capital, right? So here also we can see that asset is equal to liability plus capital, right? So that's the basic accounting equation. Dual aspect means every transaction has two aspects. Every transaction has two aspects. One is debit, another one is credit. Okay. So it's just like plus and minus that we use in mathematics. In accounting, we use debit and credit. Dual aspect of accounting. That's why balance sheet always matches. That's dual aspect of accounting. Prudence. Acha, what do you mean by prudence, guys? What is the meaning of the term prudence? Anyone? Can anyone tell me? What is the meaning of prudence? What is the basic meaning of prudence? Anyone? Intelligence, okay? So can I say intelligence backed by foresightedness, right? A person is prudent if he is intelligent, having a good IQ, plus he is having a bit of foresightedness. He can view things that can happen in the near future, right? He can estimate the probability of the things happen in the near future, making it clear and accurate, okay? So let's try to understand the meaning of prudence. Tell me which item is having the highest value in my asset column. Quickly tell me which item is having the highest value, largest value in my asset column. That's debtors, right? That's debtors. 2,50,000. So that means I need to recover money from debtors. I need to recover the money from my debtors, right? So a normal businessman would think like he is yet to receive 2,50,000. That's great, right? He'll be receiving 2,50,000 after 3 months. But a prudent businessman feels that whether he will be able to realize this money completely or not, whether he will be able to realize this money fully or not, or there can be NPAs, as someone mentioned. Land is just 1,05,000, dude, right? Debtors is 2,50,000. So the largest amount I can say is debtor here, right? So can I say that a prudent person thinks like that? Whether he'll be able to realize the entire 2,50,000 or not, or it can become NPA as well. It can become NPA as well. So from my past experience and judgment, I think that 30,000 people won't be paying me 30,000 out of this 2,50,000. People won't pay me the money equal to 30,000, right? That's from my past experience. I can estimate that close to 30,000 money I won't be recovering in the future. What can I do? What can I do? So I'll be receiving money, let's suppose after 6 months. Today, I have an estimation. I have an estimation that 30,000 I won't be able to recover. Can you suggest me what to do? Should I wait for 6 months and check that whether I'm receiving the actual amount of 2,50,000, or maybe 30,000 is actually a NPA, or I can say I'm not able to recover that? Or do I need to account for this 30,000 right now on a conservative basis, on a prudent basis? What do you think? Should I wait, or do I need to be prudent? Over to you guys. Would love to hear your opinion. Make a provision. Let's make a provision. Why to make a provision? Why to make a provision? Why? Because I'm prudent. I know that this can happen. There's a high probability that this will happen. Let's make a provision for that, right? Not a big deal. So can I say that 30,000 can be a bad debt? What do you mean by bad debt? I'm not able to recover the money, right? That's a possibility. Now, actually, it is not a bad debt as of now. I'll came to know I'll come to know about that thing after 6 months, right? Obviously. In the near future, it will going to happen. I don't know as of now what will happen. So can I say that it is just a possibility that 30,000 rupee can turn to bad debts? Let's make a provision for that right now. Sir, what do you mean by provision? Set aside an amount. Charge an amount from your profit. Let's suppose you have earned 1 lakh rupee as profit. Charge 30,000 and set aside. So can I say that provisions are charge against profit? Provisions are charge against the profit. So a prudent person will anticipate that thing, that a future possible loss can happen. So let's create a provision for 30,000 rupees. This is provision for bad debts. Sir, is this actually bad debt? I don't know. It will happen in the near future. I'll come to know only after 6 months. So let's create a provision for that, right? I don't want shocks, right? I don't want shocks. So I'm anticipating all the shocks, all the possible shocks. Perfect. So why we create provision for bad debts? Because we are prudent. Because we are prudent. There is one more name for prudence. Conservatism. Sometimes we say, right, this person is a bit conservative. He thinks too much before taking a decision. He's prudent, right? So prudence and conservatism both are same. Okay, please do remember sometimes they use this terminology. Sometimes they use prudence, sometimes they use conservatism. So please do remember this thing. Okay, prudence is conservatism only. So why do we create provisions? Because of prudence, because we are prudent. Okay, that's one possible case of prudence. Let's suppose there is an expense in future. I know that this will happen. What I can do? Create a provision. Create a provision. Why to create a provision? Because I'm prudent. I'm conservative. So that's why I'm creating a provision here. And whenever we create provisions, that is because of prudence. So prudence states anticipate, try to anticipate all the possible losses and expenses in the near future. Try to anticipate all the possible losses and expenses in the near future. Don't try to anticipate. Don't try to anticipate any possible gain and income in the near future. If you are getting a possible gain in the near future, income in the near future, that's a surprise. Let's keep it surprise only. Don't recognize the income right now. If you are going to if you are going to receive it in future as a surprise, right? But if there is a possibility that you might incur any loss in the near future, or there is a possible expense that can happen in the near future, make provision right now. That's what prudence is all about. Anticipate the possible losses and expenses, but do not anticipate any possible gains and income. What happens with provision? Okay, look, let's suppose I have a profit of 1 lakh, right? I have a profit of 1 lakh. Now I have a fear in my mind that this 2,50,000, out of this 2,50,000, I won't be able to recover this 30,000. So can I say that this is a possible loss to me? This is a possible loss to me in the near future, right? So what I'll be doing is I'll be making a provision in advance. I don't want a shock in the near future. I don't want shocks. I just want surprises. So what I can do is I can right now recognize this as a provision. I'll be charging it against my profit as an expense right now, right? That's why we call it as provisions are charge against profit. I'm charging the provision right now from the profit. I'll be reporting my profit only as 70,000 and not as 70, sorry, only as 70,000 and not as 1 lakh rupee. In what financial statements we account for provisioning? Very good question. Can anyone tell me? Can anyone tell me in which financial statement do I need to account for the Provisions, P&L account, balance sheet, notes to accounts, statement of changes in equity, or cash flow statement. Very good, Navi. P&L account. Why P&L account? Because it is a charge against profit. Profit is a part of P&L account. So definitely provision will also be a part of P&L account only. A lot of questions in the PYQ. Yes, that's why I'm creating a basic right now, a base right now for you guys, because there are a lot more questions related to provision for bad debts and bad debts in your previous year question paper. We'll be doing that as well. Okay, we'll be doing that as well. I've already done a session related to PYQ on the YouTube. Definitely you can check out that lecture as well on the Oliveboard YouTube channel. We'll be doing that in the paid class as well, right? Most of the questions we'll be practicing in the paid class as well. So that's why we account for provision, because I don't like shocks. So let's anticipate that shock right now and make a provision for that, right? And make a provision for that. It's not at all complicated. Let me simplify it for you. You are having 1000 rupees pocket money in your pocket. In your pocket, you are having 1000 rupees right now, right? You know that. You know that there is a particular expense in the next coming month. In the next coming month, you are having an expense of 300 rupee. So what you do? You set aside this amount. You also create provisions, right? Knowingly or unknowingly, we guys also create provisions, right? In our day-to-day life. We know that we are having 1000 rupee in our wallet. We have an expense of 300 rupee in the coming month. Let's set aside that. Let's imagine that we are having only 700 rupee in my pocket. Why? Because 300 rupee I need to do a expense the coming month. So let's make a provision. So we guys also day to day make provisioning knowingly or unknowingly. That's what happens in the business only. Prudence. There is one more concept would like to tell you guys. Stock. I am a pen manufacturer. So pen is my stock. There are two concepts, cost and NRV. NRV means, sorry, NRV means net realizable value. How much I'll able to realize it right now. The cost of the stock is 41,000. The NRV of the stock is just 30,000. The cost of the stock, I have purchased this stock at 41,000. However, I'll be only able to realize 30,000 of it. I'll be only able to realize 30,000 out of my stock. That's the current value. That's the current value. Can you tell me, if I'm preparing my balance sheet right now, on what amount do I need to show the stock in my balance sheet, at 41,000 or at 30,000? Anyone in the comment section quickly. At what amount should I show the stock? 41,000 or 30,000? I have a cost of 41,000. I have bought the stock at 41,000. However, the net realizable value as of now is just 30,000. What do you think? Contradictory opinion. Two students are saying 30,000. Okay, three are saying 30,000. Two are saying 41,000. Now 4 are saying 30,000. Three are saying 41,000. 4 are saying 30,000. 4 are saying 41,000. That's a tie. Who is giving the casting vote? Let me give you the casting vote. The answer is 30,000 rupees. Sir, why 30,000 rupees? Why 30,000 rupees? Do you want to show your stock at a price, at a value which is not in existence as of now? Do you want to overvalue your stock? Never. I can only realize 30,000 out of it. Why to show it 41,000? It will be an overstatement of your asset. I don't have asset worth rupees 41,000. I just have asset worth rupees 30,000 as of now. Now this is a rule. This is a accounting standard 2, which is related to inventories. What are inventories? Inventories are nothing but stock only. The rule is the valuation of inventory should be at the lower of cost or NRV. Lower of cost or NRV. This is a rule of accounting written in accounting standard 2. Sir, what are accounting standard? Definitely I'll let you know later on. So I need to value this at NRV. Sir, why you are valuing it at NRV? Why this rule has been created lower of cost and NRV, whichever is lower? Because I am prudent. Why somebody will overstate the asset? It's worth only 30,000. Why I am showing it at 40,000, 41,000? It makes no sense to me. Right? So a prudent person, a prudent businessman will always show the stock at lower of cost or NRV. Why? Because of prudence. So in case if you are getting a question in examination that you are having a stock, the cost is this, the NRV is this, the businessman has decided to value it at NRV. What is the concept or convention behind this? Prudence. What is the concept or convention behind making provisions on expenses, on bad debts? Prudence or conservatism, right? Prudence and conservatism is one of the same thing only. So I hope you guys will remember this concept now. Right? So as of now, we have discussed about business entity, going concern, accrual, dual aspect, and prudence. The most important one is prudence. And you will be also, whenever you will be having a look at the previous year question paper, you will definitely get questions from prudence or conservatism. Okay? All clear till now? Any queries, guys? Anyone? All clear? If it's all clear, do let me know in the comment section. Sir, NRV is greater than while lower in cost. Okay. So there can be two things, right? First scenario is cost is 41,000. NRV is 30,000. This is the first scenario. So I always measure it on the basis of lower of cost or NRV. So here in this case, it will be 30,000. What if the situation is just the reverse? The cost is here 20,000. The NRV here is 41,000. So what I'll be doing, I'll be valuing it on cost, which is lower 20,000. That's what accounting standard 2 is all about, lower of cost or NRV. If the NRV is greater, we'll be valuing it at cost. Sir, but why? Because that's a rule of accounting that we are always conservative, right? We are always conservative. We are always prudent. We don't want to overstate anything, right? Let's be underconfident rather than becoming overconfident. That's the rule of accounting. Not to become overconfident. It will be fine if we are underconfident, but not to cross that particular line, right? So we don't have to overstate things in accounting, that we are so clear. Next concept, accounting period concept. Accounting period, that means the life of the business is unlimited. Why? Because we are following going concern assumption. We are following going concern concept. The business will continue to go for the foreseeable future. Going concern concept. That's why we need to break the life of the business into different periods called as financial years. Right? Usually one financial year is of 12 months. Right? So we need to break the life of the business into different financial years so that we can compare one financial year with another. It's just like that when you guys were in school. First you are in first class, right? You are in first class, then you came in second class, then third class, then fourth class, and so on. Why is it so? Why you guys were not directly transferred from first class to 12th class? Because your parents, your school teachers wants to measure your performance. He has scored 80% in first class. In second class, he has scored 85%. In third class, he has scored 90%, and so on. Why? Because results are now comparable in the same manner. In the same manner, in business, in school, it is about percentages. In business, it is about money. It is about number, right? In the first year of operation, the business earned a profit of 1 crore. In the second year, it earned a profit of 1.5 crore. That means the profitability is growing 50% year on year basis. In school, it's about percentages. In business, it's about money. The concept is same. We break the life of the business into different accounting period, which is called as financial year. Acha, can you guys tell me what is the financial year dates in India? When the financial year is starting in India and when the financial year is ending in India? Anyone? The calendar year is definitely January to December. What about financial year? Anyone? I hope everybody is aware of this thing. 1st April to 31st March, right? That's my financial year, 1st April to 31st March. So let's suppose if I talk about this particular year, so 1st April 2025 to 31st March 2026, this is my financial year, one financial year, or I can say financial year 2026. The meaning of financial year 2026 is from 1st April 2025 to 31st March 2026, right? That is the meaning of one financial year. Let's suppose I bought a brand new car, BMW. Okay, I bought a brand new car, not just for my personal use, but for using this car in my business. I'm using this BMW car as a taxi, okay, a luxury taxi, right? And I'm earning every year, I'm earning 10 lakh rupees, let's suppose. Every year I'm able to earn 10 lakh rupees out of it. I'm using it as a taxi. So it is generating an income of 10 lakh rupees every year. There will be definitely some expenses as well. What will be the expenses? Maintenance of this car. Can I say depreciation? Will this car depreciate? Yes or no? In the comment section, guys. Will this car depreciate? This is a fixed asset. Definitely it will depreciate. Definitely it will depreciate. So let's suppose every year I incur depreciation as an expense, maintenance expense, service expense, and so on. So I can say that every year I am doing an expense of 6 lakh rupee. In the first year of operation, I did an expense of 6 lakh rupee. In the next year, I did an expense of 7 lakh rupee. In the third year, I did an expense of 8 lakh rupee, say for example. So what will be my profit? 10 lakh rupees the revenue minus 6 lakh expense. 4 lakh is my profit in the first financial year. In the second, 10 lakh minus 7 lakh, 3 lakh rupees my profit. In the third year, 10 lakh minus 8 lakh, 2 lakh is the profit. This is called as matching concept. This is called as matching concept. Sir, what's there in matching concept? What's so special in it? This is normal, right? You have always heard this. What's so special in it? Match the related expense with that of the income. In first year, if you have earned 10 lakh rupees and the related expense is 6 lakh rupee, account for this 6 lakh rupee in the same financial year. In the next year, I have incurred 7 lakh rupee in expense. Keep it in line with the revenue of the next year. I am earning this revenue by using this car, and at the same time this car is causing some kind of expenses, so I need to match my income with that of my expenses in the same financial year, and that's what the concept of matching concept is all about. And the best example is depreciation. The best example is depreciation. Why do we charge depreciation? Because the value of the fixed asset goes down every year. So that's why we try to match this expense. Whatever benefit I am able to take from this car. What kind of benefits I am taking? Revenue, income, right? Every year I am able to generate an income. But every year there's an expense called as depreciation. So that's an expense. So whenever the expense is there, whenever the value of the car goes down, try to match that expense with that of the revenue. Charge that in the corresponding year in which you are able to generate the revenue. That's what matching concept is all about. That's it. Now in question, in the examination, they can ask you guys, depreciation is based on which concept or convention? So the answer is matching concept. The answer is matching concept. Because in matching concept, that's what we do. And as the name says it all, matching. We are just doing a matching exercise. Let's match the expenses with that of the related revenue. That's it. Consistency. Consistency. Let's suppose there is a student. First he started learning about EPFO syllabus. Then the very next day, the student turns to CA course. Then on the third day, he is learning about CFA. On the fourth day, he is learning about NBA stuff. On the fifth day, again he is back on track. He is again doing EPFO syllabus. Is he consistent? No. He is not consistent. Can I compare the results of whether he is able to grow in terms of EPFO syllabus? No. Why? Because he is not consistent. In the same manner, this happens in business as well. There are so many methods of valuation of inventories, of measuring depreciation. There are multiple methods. There is straight line method, there is written down value method. These are the methods of depreciation, right? We'll definitely have a discussion later on about that. As of now, there are many methods. Just like we are having many courses in life, in accounting, in depreciation and inventory valuation, there are a lot of methods, right? So let's suppose in the first year of operation, I have adopted the method of depreciation as a straight line method of depreciation, SLM. Okay. Then the very next year, I shifted to WDV. Then in the third year, again, I shifted to SLM. In the fourth year, again, I shifted to WDV. Sir, you only told in the very first class, let's play with accounting. That's for study purpose, right? Don't play with accounting like this. Don't keep on changing the method year on year basis, right? Why? Because it will hamper your consistency, it will hamper your comparability. If you keep on changing your data, if you keep on changing your methods every year, your financial statements will not be comparable. In the first year, you are charging depreciation as per SLM. In the next year, you have changed your method. So your results are not on the same base. You are not following the same base year on year basis. So I can say that because of your inconsistency, your results are not comparable. That's why we are having a concept of consistency. Be consistent in whatever you are doing. If you have followed WDV, go ahead and follow WDV in the second year, third year, and so on. Don't change multiple times. That's what consistency is all about. However, you can change if there is a requirement of law. A particular legal act is there, a law is there which is telling you to use SLM now. Earlier you were using WDV, now that law is requiring you to shift to SLM, then you can do so because that's a requirement of law. Second thing is there is a requirement of accounting standard. Earlier you were following WDV method. Now accounting standard, newly introduced accounting standard came into picture. Let's suppose, for example, and it is adhering the compliance of sticking to SLM basis, not WDV, right? So you need to shift. Now you need to shift. Why? Because the accounting standard is suggesting you to use SLM. Third thing, better presentation of financial statement. So what do you mean by that? If you shift from WDV to SLM, it will result in better presentation of your financial statement, is what you feel. Then you can shift to SLM. So in these three cases, you can definitely change your methods. Otherwise, please be consistent. Don't change methods frequently. Okay, guys, so that's all from my end for today. Thank you so much for attending the session. I hope you guys enjoyed it. Bye bye. Take care. We'll definitely catch up tomorrow, same time, but new concepts. Okay, bye bye. Take care. See you soon. Happy evening. Acha, one more thing, guys. I just forgot to mention one more thing. Just give me a second. Huh? So this is my Telegram channel. You can join this particular channel. I frequently share finance and accounting related stuff on this particular channel for all the students related to RBI, SEBI, UPSC, EPFO exam, SEBI exam, PFRDA exam, and whatnot, right? So I frequently share finance and accounting related stuff on this particular channel. So if you are interested, you can join this. Okay. Okay, guys. So that's all from my end for today. Bye bye.